networking to uplift each other in all areas of life. Hello, this is Dr. Melise Richey, and I'm broadcasting to you from sunny St. Augustine, Florida. We are on Blog Talk Radio, and welcome to MaslowWoman Live. Hello, everyone, and welcome to another session of MaslowWoman Live presents The Golden Purse with your host and financial planner, Ramiah Pickett.
All right, everybody. Are my listeners still there? If you are, then I definitely know you have much love and a lot of patience. And this is an episode you don't want to miss because I've got a lot of new things for you. And I'm very excited to be back with you guys on the radio lines tonight. And what I'd like to do at this moment in time is actually introduce one of my very good friends that I'm so honored to have as a guest on the show. His name is Tanner DeLoach. And he will actually be joining me on the Golden Purse series. And, I'll give you guys a little bit of background on him and, let him say a few words and about his experience and, why that I wanted him on the show. But for one of the things, we talk about financial education for women, but it really is about financial education for everyone. So I wanted to bring in someone else, male perspective, and one of my colleagues, someone that I have the utmost respect for. So without further ado, Mr. Tanner, you want to say something?
Yes, thank you very much, Ramiah, for having me on. This is very exciting, and thank you for the ability to help share whatever knowledge I can to your listeners. And as you said, personally, I've been in the financial field for pretty much my background's in it. I started trading mutual funds when I was 15 years old. So the whole idea of money and how money works and finances and how to retain it and how to make it work for you has been a passion of mine for many years. And I know it is yours as well. So this is going to be very fun. I'm very excited to be able to do this with you as well. So,
yeah, right on.
This is going to be a great time. I'm ready.
I know it will, and you're a fellow UNF alum as well, so go Ospreys.
Yep.
Yep. So, yes, you're a Bachelor of Business Administration and Finance, Corporate Finance, and then you're also able to get your MBA in Entrepreneurship. Is that right?
Yes, which was great. As I started looking into furthering my education, I got really intrigued by the upcoming focus on the entrepreneurship aspect of the educational system, which is really intriguing because it encompasses a variety of different areas of business, from marketing to management, accounting, even up to human relations and even people relations. So it helped me basically broaden my scope and kind of not necessarily be a master of all trades, but be able to know a little bit and know to be able to, when I can bring in someone, when something's over my head, I can bring in someone who's a little bit better subject expert, because for a lot of it I know enough to get in trouble. But I've been lucky enough to know a variety of people I can pull in when I know it's above my head.
It's important to have that team working for you. I think Henry Ford, was a great example of that, and I was, doing some reading about him, and basically, people didn't like what he was doing, and basically were, essentially attacking him, and, about his level of knowledge. And he's like, I can have a whole slew of people that, I can pull in, and they're the experts on things. I don't have to know it all. So when you actually, leverage and have a team behind you, it's huge, and that's what it takes good teams to win. Love sports, love that concept, but it applies to, a lot of areas of life. In the home, in business, and in relationships, and, just good to have a good team on board. So I'm happy that we're on the same team, and we can talk about stuff that we love and, hopefully get some information and a different perspective out there and, get our listeners engaged. And to, on that note, I want to encourage, everyone to, please join us on, if you want to ask any questions, you can call in with your questions. The number is 347-884-8048. You can also send us some questions via Twitter, and my Twitter handle is at Ramiah Pickett, and that's spelled RAMIAHP as in Paul, ICKETT. And Tanner, are you on Twitter?
I am. It's at Tanner DeLoach not .com. At Tanner DeLoach, yeah.
All right, cool.
Yep.
So yeah, if you're shy and don't want to call in, you can most definitely send us a tweet, or you can actually, if you're on the chat room online via MaslowWoman.com, you can actually send us a message via the chat. So there's different ways for you guys to get a hold of us. So, as we always do, I normally give you a little bit of background about, the last episodes that I have. And actually, Tanner, will you go ahead and just spell your last name so if anyone needs that, they can
Oh, sure, no worries. It's I'll just go ahead and spell it all. It's Tanner, Tanner, last name DeLoach, DeLoach.
All right, awesome. Yeah, we want to make sure people can find us, when they're trying to get in contact with us. So, we always give a little bit of a recap of the last episode to bridge everything. So the last time we were going over some basics of investing and going over some simple but really important principles to have to be aware of, and we gave some examples of how they can be applied in our lives on a daily basis, and really for encouraging people to beef up their savings, because as you probably know, Tanner, Americans, we're not doing so hot right now when it comes to saving for retirement.
No, you're
we're behind the eight ball. Mm-hmm. Yeah, so we're going to continue that tonight by talking about just some other basics and some things to avoid. The theme of tonight was learning from mistakes, and one of the things that kind of got me on that topic too. I don't know. For some reason, I've been doing a lot of driving lately. Probably just meeting with clients and stuff, and that's just taking me all over the city. So I'm from the north side to the west side to the south side to the beaches, like all over. So I have some time in my car and been noticing these signs. And the one sign says, "You never make a mistake twice." So that had me thinking pretty much ever since I saw that sign. And that's kind of my inspiration for this show, about learning from mistakes and how we can, prevent those mistakes from happening again in our financial lives. But before we get into that, I want to do something new on the show too, and I want to kind of talk about what's been going on in the market lately. Hit some high points, and just to bring that in, and since it is a financial education show, it would help for us to kind of talk about that. So here are some quick stats for you guys. The Dow Jones today closed at 14,700.80. That was up 0.17%. The NASDAQ was also up. It closed at 3,289.99. That's up 0.62%. And the S&P 500, that closed today at 1,585.16. That's up 0.4%. So, overall, we're in the green for today for the market. So green is good, red is bad. But I say that and laugh, but we have to expect that there's going to be some reds in order to see some green. So it actually all kind of makes sense, and that's some of the things we're going to be teaching and talking about in our show, and really understanding what all that means. So we want to make sure our listeners are aware. How would you describe, for some of our listeners that might not know what those stats mean, Tanner, if you were to keep it, kind of a basic, simple explanation, how would you describe, those stats I just rattled off?
Oh, the red versus green, or more of the percentages? Because I know as we talk, I can get specific, crazy specific, or I can be vague. But what I think you're talking about is kind of the red versus green, and as everyone kind of knows, everything's pretty much cyclical. you're going to have the reds, you're going to have the greens, but the big thing is being able to kind of ride the wave and stick with the consistency. Because as if you look at a chart from the Dow, there's one, I think, Iverson, which is a financial data company, has a chart that shows over the last, I believe it's 92 years, through the ups and downs, through the Great Depression, through the stock market crash, through 9/11, that the Dow has been up 12.3. I don't have it in front of me, so don't quote me exactly, but it's one of those things is that if you stick with it and you're able to hold on and don't, when something drops a percent, go and run and hit the bank and sell it all. It's one of those things you got to be able to kind of go with the ups and the downs, and just like everything in life, we all have ups, we all have downs. It's just being able to stick with the course is one of the big things that I tell a lot of my friends, clients, and people that ask me any kind of financial things.
All right, yeah, exactly. And it's something, like what you're hitting on too is probably one of those pitfalls that we wanted to talk about. Some of the common mistakes and pitfalls that are out there is reacting too quickly to some of these changes and fluctuations, and maybe that has to deal with not having some education and understanding how things work. So that's why we hope you're listening to this show so you can get a little bit of knowledge under your belt to help you to be better equipped to manage things and to feel more comfortable with what you're doing. And we also highly recommend that you have a coach, financial coach on your side that you're able to talk to and get input and some guidance for your specific situation. And really when it comes down to it, the Dow Jones, the S&P 500, NASDAQ, basically those are they're an indicator of stock market prices. The Dow Jones is made up of about 30 blue chip stocks companies that are listed on the New York Stock Exchange. So they're it's these major companies, and it's basically they're being tracked for years and years and years of how they're performing, and they're just indicators of what's going on in the stock market. And then your NASDAQ's more your techie stuff, tech companies and things like that, and then your S&P 500, that's 500 different companies across all different types of industries and stuff like that. Mm-hmm. So just to give
Ramiah,
a little background.
The coach aspect, that's huge, and it's one of those things is that a lot of people like to try to go at it on their own, and I can't remember who the quote's from. I can't remember if it was Michael Jordan or Tiger Woods that they said, "I wouldn't be where I was without a coach." He's like, I think it was Tiger. He's like, the only reason I'm number one in the world is because I was able to get someone who could see past what I was looking at. Because a lot of times us as people, we kind of have the blinders on. We're kind of focused on our own stuff, and we sometimes aren't able to see outside of our own little bubble, while a coach is able to kind of take that macro viewpoint and be able to guide us. So everyone in sports has coaches, from Michael Jordan to Tiger Woods to Joe Montana to Wayne Gretzky. They've all got coaches, and one of the main reasons they are where they are is because they were able to at points put their ego down a little bit to the side and just listen and follow. And it's, as we all kind of know who those main people were, they definitely made an impact on more than just the sports world. I'd say the whole world itself.
Mhm. Yeah, that's so true. And like you look at, like you said, keeping along with that sports reference, even with like the team that just some of the teams that came up in the March Madness for college basketball, that tournament.
The Final Four, yeah.
Mhm. Yeah, it came out of nowhere. But they really, they have some good coaches, and the coaches that were able to instill that belief in them and push them to go further than what anyone else had expected of them. So there were some major upsets and things like that. But yeah, it's so important to have. So definitely highly encouraged. And that also reminds me of another sign I saw on the highway. Yeah, again, been doing a lot of driving this week. But it says, when DYI turns into OMG. Okay.
Is that the plumbing one? I think I know what you're talking about.
Yeah, it's the plumbing one.
Yep.
So at first I was like, okay, I know what OMG is, so okay, fine. But then I was like, DIY, like, then I got it. I was like, okay, got it. Took me a minute or two. So, no, DIY. Sorry, my bad. DIY. Do it yourself. So do it yourself. When do it yourself turns into OMG. So it was funny. It's really cute. So, but it's to the point too, because it was about plumbing, and I know some of the stuff I wouldn't tackle on myself because I would have a major mess on my hands. So I think I like to, kind of take on that slogan and apply it, to financial life too, So there's my another plug for getting a coach.
Mm-hmm. Oh, yeah. Even on things like that, the do-it-yourself aspect. And one of the things I love to tell people is about my personal failures, just because if you fail to learn the lesson, then that's your actual failure. As I said earlier, I started playing with mutual funds when I was young. I started getting into playing the stocks because I heard, you make money here, it's quick money, yeah. So I took some money I'd saved up, got myself a little trading account, and thusly lost it all within about a month. And what I really learned from there is that I was trying to pull this random information that I was just hearing from out in the blue to jump in and to buy stuff, which thusly about 10 years later learned that a lot of those people throwing out there those recommendations are usually selling while you're buying. But it wasn't until I actually I worked with a professional trader that he learned. He's like, hey, I've always had a team around me. He's like, there's no way I can fully understand every little thing of the market because the market's nothing but people, and everyone's looking at different indicators, aspects, things like that. So I learned my lesson quickly by not having someone to run stuff by or finding someone who knows more than I do to kind of help educate myself.
Right. Exactly. So that's a perfect example, learning from mistakes, and that's what we really wanted to talk about in the show. And and we all make mistakes. There's things that I've done that I would do differently. And that's admittedly so, but, learning from that and then saying, okay, I, did it my way or did it that way, the way I thought it should have been done, but then recognizing the error of that and, saying, okay, maybe it makes sense for me to listen to somebody else or do a little bit more homework before I go at this again. So I, just want to get that out there. We're not like high and mighty by any means, but, we want to share some of the stuff that goes on and, bring awareness to that. So again, hopefully, we can make our purses or our wallets, as golden as can be, and to, look towards a brighter future than, maybe where we are right now. So some other good news that I saw in the market today was that jobless claims fell by 16,000. So it seems like there might still be some gas in the tank for a recovery in the labor market. What do you think about that?
Yeah.
Do we need to get excited about that, or do we need to be like, okay, well, let's just see what else happens?
Well, I think we should get a little bit excited because that shows that there's more people or more companies out there generating more revenue, which definitely means there's more people out there spending more money, which is always good. The more money we get circulating, the more it gets kind of spread out throughout the economy. One of the things I had heard that a lot of employers are doing, I can't remember if I read this in New York Times or the Wall Street Journal about a month ago, is that a lot of companies are doing a lot more job sharing to be able to get more people employed to kind of help kind of like spread out, like they'll take like a 40-hour job and split it like 2 part-times or do a 15 and 35 or kind of mixing it up a little bit. That way that they're able to kind of help a lot more people, which I personally think is great. That's giving more people opportunities to get out there to help themselves as well as kind of help bolster up the economy because I think here I got a stat right here. The American average household as of July of last year is an average of $15,000 in the hole, while 43% of Americans don't even have up to 10,000, which there itself shows that everybody is upside down, and it's in. I'll tell you, I've been in that situation myself years ago, and it's not very pleasant. But with these jobless, the hope is that if we can, and this is why I love teaching this so much, because it makes me feel so great after I've worked with someone to come back later and be, you know what, I actually took what you said, followed it, and now I feel better personally. Don't stay awake at night, able to breathe a little bit better. And that's where I think a lot of the people focus on dropping the debt and increasing the savings really needs to kind of be the next movement for us in the economy, because that'll definitely keep the money flowing, get the investment back in there, and so the market's been kind of reacting to it and kind of chugging along as we go.
Yeah, it absolutely has, and I think still, there's still, a lot of people that are affected, and not having that employment. So it's definitely a step in the right direction. It's good, but it's still, slow moving. And I think, we got to make some opportunities out there, and help like you said, to help things move along by reducing that debt and getting money into creating new companies, new businesses, new firms, and getting some, freshness out there. So I think that's huge. But I like that. I think the market liked it. It was responded, well to that. So, hopefully we can see some continued progress, as we go through. I think we're in the second quarter now. So some of these companies are doing pretty awesome.
Yeah, speaking of that, one of my favorite companies, and as you kind of know, I'm kind of a gun dork. I kind of like going out there and shooting off at the targets and stuff. But Cabela's got up 16.42% today. They've been actually running up crazy lately, and that's primarily because of kind of the market's kind of shortage on guns and ammo. I'm sure everyone's read out there is that. Prices with A, lot of regulation, and B, a lot of limited supply has drove the prices of ammo and a variety of different guns up to a point where the margins are outrageous for these retailers. And since the demand is so high, people are spending 2, 3, even 4 times the amount they would prior to obtaining these, which is great for certain retailers like Cabela's, and also follow Ruger-Strum and Smith & Wesson, and both of them have been up, I think almost 100% each in this last year due to this, and like all markets are based on the law of supply and demand. You go and start shrinking that supply, the demand goes up, and people are pretty much willing to pay whatever to get it.
Yeah, right. Well, and that's a good. I'm glad you use that as an example, because do you think this would have happened if not for that unfortunate incident a few months ago with that shooting?
Yeah,
with the whole
sometimes
thing?
and I do think a lot of it was due to that, and there's two sides of it. There's the people that are fearful and they're getting these to help protect themselves. And then there's the other people who are just trying to get on fear that there's going to be no more supply. But yeah, in things like that, different things that happen in the news and out in the world, and it was very unfortunate, and the heart goes out to all the parents of those kids and everything. But it's that's definitely been a definite driver, and a market is nothing but people, and unfortunately sometimes fear and different reactions drive the market different ways depending on is it a fear of good or a fear of bad.
Right. And before that incident happened, who would have ever thought to invest in Cabela? Was it on the radar?
No, it really wasn't. I think I've got it here. I think before the incident, they were trading in the 30s, and closed today at 65.45. So,
wow.
And I think I've got a chart here. when did that, was it, I'm trying to remember the day of the shooting. I don't have that right in front of me, but I can see a spike in I think it went up like 7 or 8% one day, and I'm guessing that's the date. I can't really pull the exact data on my chart I've got in front of me, but I can see the jump flattens out, and then it starts trickling back up. And then actually last week it did another big jump, and then it did that big jump today because looks like the government's looking to buy another 1.5 billion rounds of ammunition. So what they do is they basically help drive the market up there. They say, hey, we're seeing this trend too, so we're going to get in on it. And I think that not necessarily pushed a lot of people, but they saw the opportunity. You know what? Hey, if they're going in and buying all this, maybe I should go buy it. Maybe there's something I don't know that they know.
That's true. And what I want to say about that too, because that is also one of the things I want to make sure people are aware of, though, and not making a mistake on. One of the common mistakes and one of the pitfalls is trying to time the market. So right now, the question out there is, whether maybe something like that is a good buy. It's hard necessarily, to say that without having enough information, and by no means are we giving any specific investment advice or recommendations. But as we're kind of teaching here, we got to remind people of being careful, not to try to time the market, because the problem is most people are going to buy when they should be selling, and most people are selling when they should be buying. Mm-hmm. Would you agree with me on that one? Or
110%. And yeah. When I mention these different stocks and stuff, is I only got back into buying individual stocks myself after I spent a lot of time researching, finding a specific system. Personally, myself, I'm a huge advocate of asset allocation diversification, because it's something where I know I'm not I'd call myself a professional trader, and I know that many people out there aren't. And it's something that the utilization of diversified funds and putting your money in different baskets allows it to withstand those dips and stuff we talked about earlier, that enables you to keep that 12, 15, 20% over a certain amount of time by not saying, oh, no, it dropped 2%, I'm going to sell. And then as soon as you sell, it jumps up 10%, and then you kick yourself in the butt.
Mm-hmm.
Yeah, there's no really way to time the market. Even professional traders can't do that. Basically, they don't time the market. A lot of times it's either slightly educated guessing, or what they do is they'll just find a big company and kind of follow their trends. So there's no way to time the market.
Right. And the thing is, the average investor, they miss out because their money tends to come in near the top and then it goes out at the bottom. So majority of the gains that you have in your equity or your stock, that's made in a very short amount of time. So if you're not in the stock when it moves, then you just miss out altogether. So like you said, it's virtually impossible to accurately find the top or the bottom of the market. And like you said, not even the best out there can do it consistently. So what's our, I think you touched on it a little bit, but did you mention one of the strategies that investors can implement to
the asset allocation?
There's asset allocation, and then what I was thinking is the dollar cost averaging.
Oh yeah. Oh, that's actually what I do. I've got a monthly amount that I actually have come out of my account that buys a asset allocated mutual fund, and knowing that I've got in the aggressive fund, know it's going to go up and down. I keep buying the same amount every month. Boom, like clockwork. Because you know what? Some days it's going to be at 10, other days it's going to be at 15, other days it's going to be at 8. And at certain times, people think I'm a little crazy. I get excited when it drops to 8 because I'm like, you know what? I might even go buy some more.
Mm-hmm.
And a lot of people look at me a little funny, but they're like, why are you doing that? I'm like, because I bought a little bit at 10, I can buy twice as much as 8, and it goes back up to 10.
Sale, right?
Exactly. I'm that much better off.
Yes. So that's one of the tips and techniques, and one of the pieces of information, the little nuggets, as I like to call them, that I want to leave with you listeners today to put in your tool bag in your golden purse, and that strategy is dollar cost averaging. So basically how that works, and Tanner just described it beautifully, but I'll just summarize it again just to make sure you guys got that. It's a technique of buying a fixed amount of a particular investment on a regular schedule, regardless of the price. So you wind up buying more shares when the prices are low, and then you buy fewer shares when the prices are higher. But overall, your average cost is going to be lower than if you try to pick something at the wrong time. So we'll encourage you guys to talk to your coach or financial coach and see how you can apply that in your own your personal strategy there. And then another one that we talked about was just expecting a smooth ride. So like you said, Tanner, when you see them go down, it's not the end of the world. If you've got the appropriately constructed and it's managed, and you have to know what to expect. It's not going to be smooth sailing, and we're not going to be in the green every day, right?
Right, and that's kind of one of the things I tell some clients of mine is I say if you sit and watch your investment each day, it's going to drive you crazy. I was like, I'd almost want to tell or a lot of times I'll tell them is look at it once a month or even once a quarter, and then look at the time frame for the month or for that time period itself. Because if you sit and you look, like one day you'll be, yay, I'm up, and then next time, yeah, boo, I'm down, and people put so much more stress on themselves watching things like that instead of just saying, you know what, this is a long-term goal. I know I'm going to keep following the path to get there, and you know what, it's a marathon. It's not a sprint. If you try to sprint, you're going to wear yourself out a lot sooner than someone who's following the straight path that they put in front of themselves. There's a great book that I love, From Good to Great. Jim Collins, I believe, is the author, and he one of the examples he puts in there is that about two different teams trying to reach the Antarctic Circle. They both started about the same time, similar equipment, but the ideology was different. One group did 20-mile march every day, no matter good weather, bad weather, good weather, bad weather. They still stuck to their 20-mile march a day. While the other group, when it was bad, they wouldn't go as far. When it was nice, they tried to push themselves. And at the end, the ones that did the 20 miles a day got there faster. They got their whole teams were in a better situation. While the other team is certain days they would run their team into exhaustion. There's a lot more people fatalities and stuff. So it different aspects: financial, life, your business, your personal. It's being able to put that plan and just follow it and step by step and not change it. And if you're going to change it, make sure that you've got a couple people, advisors or your coach around to say, hey, you know what? Maybe that is a good little shift now, or nope, just keep on the path. We're running great. Don't worry about it.
Mhm. Yeah, I couldn't agree with you more on that one. So to keep in mind, so far we've said, we don't want to make the mistake of trying to time the market. If we've done that in the past, we don't want to do it again. We don't want history to repeat itself in that regard. And then not expecting a smooth ride all the time, and knowing that some of these steps are going to be actually beneficial for us. And just to further give you, our listeners an example to try to visualize this concept, let's say of the dollar cost averaging. Just want to make sure we're all on the same page here. Let's say if you decided to purchase $100 worth of ABC company each month for 3 months. So let's say in January it was about $33, or it was $33. So you buy 3 shares. In February, it's worth $25. So you get an extra 4 shares. And then in March, it's at $20, so you buy 5 shares. So altogether, you have purchased 12 shares of ABC company. Now, you could have in January said, oh my goodness, all this news is going on, there's excitement, let's go ahead and let's buy it. And, you could have, spent $300 and, got your 9 shares. you would have paid $33 for all the shares with your $300. Obviously, come March, it's only worth $20. But by dollar cost averaging, your approximate cost per share was only $25. So that's the benefit of implementing that strategy and not trying to time the market. So on that note, I think we kind of want to wrap up because I want to give you some public service announcements, actually just some housekeeping type of stuff, because I'm making a couple of changes to the show. And if you guys have been with us since the beginning, I have my co-host Tanner DeLoach on the line, and he'll be joining me on a regular basis for the Golden Purse Series, financial education for all. It's not just for women, but it's for men, and sometimes we'll go back to some of the topics that I feel, and I'll take that liberty since it's my show, if I want to throw out some specifics to help our ladies that are listening tonight and every night. But we're going to go to on a weekly basis, and we're going to probably have a little bit of a shorter segment because we want you to get all the information and not be overloaded and overwhelmed. And then also thinking about switching up to a different time during the morning. And if that doesn't work for you guys, it's okay, because the great news is that any and all of the shows on MaslowWoman Live are on demand. So guess what that means, guys and gals? That means you can listen at any time. It can be 3 o'clock in the morning. It can be 7 o'clock at night. It can be during your lunch break, when you get up in the morning, when you go to sleep at night. Whenever you want to, you can listen to the shows over and over and over and over again. So if you miss anything, feel free to go back and listen back to the episodes and get caught up, and you won't miss a beat. So again, I just wanted to let you know that we're making some changes. So please check out MaslowWomanLive.com for the show details. You can find us as well on Facebook as well as on Twitter. So Tanner, I've had an awesome time with you on the show.
Oh, I was. Thank you very much for inviting me, and I'm looking forward to the shows going forward. And it's fun to sit here and discuss the things that you're passionate about, because it definitely brings out, at least in myself, examples that I hope I can let other people hear about. Because I hope that the failures I have, I can keep other people from doing by explaining them what I learned from those. And that's just one of the biggest things that I love doing personally myself. So I thank you for giving me the opportunity to come on here and help the listeners out there.
Yeah, exactly. And, that is totally my passion. I've said it many times that, and one of the things I've always have enjoyed and really felt fulfilled in doing is, sharing the knowledge that's been provided to me, with others and giving it back and paying it forward. So to be able to talk, on the show and, share that, some information that may hopefully be helpful to someone, that's important. If it reaches just one person, that's amazing. And it's really cool to be able to, to have a conversation, with you, and to get your perspective on things. And, it also is a way for me to learn and to sharpen, to my skills and knowledge. So it's been really awesome. So I'm looking forward to the next episode, and just to remind you